Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Perimeter Solutions Inc. quarterly report. Perimeter Solutions Inc. offers a diverse range of businesses and services through its two segments, fire safety and specialty products. The fire safety segment provides fire retardants, firefighting foams, specialized equipment services for various customers including federal, state, provincial, local/municipal, and commercial entities. The specialty products segment offers phosphorus pentasulfide-based lubricant additives used in pesticide and mining chemicals applications, electric battery technologies. Perimeter Solutions, Inc. PRM stock has skyrocketed by 74.41% in the past year due to a combination of factors. The company's robust third quarter 2025 financial results, which included a 9% revenue increase and surpassed analyst estimates, have contributed significantly to its growth. Additionally, Perimeter Solutions secured a 5-year agreement with the U.S. Department of Agriculture, providing a stable and exclusive revenue stream. Major financial institutions such as Morgan Stanley and UBS have raised their price targets for PRM, signaling increased confidence in the company's future growth potential. Analysts maintain a buy consensus rating for the stock, further boosting its value. Overall, Perimeter Solutions' strong market performance has led to new 52-week highs, outperforming both the U.S. chemicals industry and the broader U.S. market over the past year. The primary drivers of revenue growth for a company are multifaceted. Key contributors include sales to major government entities, such as the U.S. Department of Agriculture's Forest Service and the state of California. Additionally, significant increases in net sales within the fire safety segment have been observed, with a 43% rise in 9 months ended September 30, 2025, compared to the same period in 2024. This growth is attributed to increased fire retardant and suppressant sales. Furthermore, revenue growth has also been driven by recently acquired businesses within the specialty products segment. These factors have collectively contributed to overall revenue expansion. On the other hand, primary drivers of revenue decline include a net sales decline in the specialty products segment, resulting in a 15.3% decrease from 2024 to 2025. Unplanned downtime at a tolling facility in Sauget, Illinois, has also led to a $5.3 million decrease in base business. Net income and profit margins. A shift in performance. The financial performance of the fire safety segment has shown a significant improvement, with net income before taxes increasing from -$81.4 million to -$30.2 million. This represents a substantial turnaround in fortunes for this segment. In contrast, the specialty products segment experienced a decline in net income before taxes, decreasing from -$15.4 million to -$31.6 million. The adjusted EBITDA figures also reveal a notable change in performance between the two segments. The fire safety segment saw an increase of $52.1 million in adjusted EBITDA, rising from $212.8 million to $264.9 million. Conversely, the specialty products segment experienced a decrease of $3.8 million in adjusted EBITDA, dropping from $34.5 million to $30.8 million. These changes indicate a shift in performance between the two segments, with fire safety showing improvement and specialty products experiencing decline. The company's financial performance indicates a consistent generation of positive operating cash flow. The net cash provided by operating activities has increased from $194,375 in 2024 to $219,549 in 2025, demonstrating an improvement in the company's ability to generate cash from its core operations. This trend is further supported by the company's status as having a positive operating cash flow, solidifying its financial stability and growth prospects. The company's debt level or interest expenses have undergone significant changes in recent years. Specifically, the interest expense has shown a mixed trend. On one hand, it has decreased from $10,054 to $9,870 over the 3 months and 9 months periods in 2024 and 2025 respectively. However, there are instances where it has increased, such as by $1.8 million for the 9 months ended September 30, 2024 compared to 2025. The issuance of preferred stock and associated dividends recorded as interest expense have also contributed to the changes in interest expenses. Overall, while there is a slight decrease in interest expenses, the trend is not consistent across all periods. The company's performance in 2025 was mixed across its segments and regions. The fire safety segment stood out as a strong performer, with a 9.4% increase in net sales and a significant boost in segment-adjusted EBITDA of $19.7 million. In contrast, the specialty products segment struggled, with only a 14.6% increase in net sales and a substantial decline in segment-adjusted EBITDA of 29.3%. At the regional level, the United States accounted for the majority of revenues at 79%, followed by Europe at 10%, Canada at 6%, and other countries at 5%. Management's outlook on company strategy. The company is committed to long-term growth through improved operations, disciplined capital allocation, and management of its capital structure. To achieve this, the company plans to expand its business by enhancing products and services, investing in expansions through acquisitions, and prioritizing domestic sourcing while maintaining alternative supply sources. In addition, management is taking proactive steps to mitigate inflationary pressures by aggregating purchase requirements, negotiating cost reductions, and identifying more cost-competitive suppliers. The company will also continue to invest in fluorine-free foam technology and focus on the fire safety segment, which benefits from secular growth drivers. The capital expenditure budget for fiscal year 2025 is expected to cover both maintenance and growth capital expenditures, ensuring that the company remains competitive and adaptable in a changing economic environment. The company has engaged in share buybacks as part of its financial strategy. Specifically, between the 9-month period ending September 30, 2025, and the 3-month period ending on the same date, a total of $40,370 was allocated towards buying back shares. Additionally, during this time, the company repurchased 3,774,675 shares under its share repurchase plan. Inventory buildup concerns loom large. A review of our financial summary reveals a pressing concern regarding inventory buildup. The numbers paint a clear picture. Raw materials and manufacturing supplies have surged by $3,182, while finished goods have skyrocketed by $16,766 on page 20. This significant increase in inventory levels raises red flags about potential supply chain disruptions. With an excessive accumulation of goods, we risk being unable to sell or utilize them efficiently, leading to wasted resources and decreased productivity. That concludes the financial summary for Perimeter Solutions Inc. Feel free to comment below, and I will be happy to answer them when possible.